With all the hoopla created around the Bitcoin ETFs and the 2024 halving event, crypto investors have yet again fallen victims to their old ways. Whether that means naively buying into the institutional adoption of Bitcoin as a key step towards shaking out the global central banking system, or FOMOing into the latest dip in gold rush, the Ethereum layer 2 bubble, or the infinite money glitch of free shitcoin airdrops, one thing is for sure: unhinged greed and a lack of vision have both made a roaring comeback and an amazing job of separating crypto from freedom. And believe it or not, we can quantifiably observe it. So in this video, we're gonna go over what the true forgotten crypto narrative is, why it might be too late by the time people realize what it is, and how we can stand to reconcile both wealth building and the conservation of freedom down the line if we choose to position ourselves correctly right about today. Let's talk about it. Let's start by addressing the elephant in the room. The Bitcoin ETF approvals were not a victory for Bitcoin or crypto adoption as a whole. Entrenching Bitcoin into the legacy system and having boomers allocate 1 or even 5% of their retirement savings by proxy into an obscure asset class that they don't care to discover for anything else than outsized gains is not going to move the needle in separating money and states, let alone in increasing societal freedom in general. No amount of mass financial adoption will change the fact that in order to attain true financial freedom, people will need to both learn and accept to take adult responsibility for self-custodying their own wealth. And even that, as we will see shortly, is still not enough. By seeking approval and permission to integrate within the very system that it was supposed to replace, Bitcoin has been sold down the river by a very large part of its supposedly supportive community. And worse yet, the absurd myopic tribalism of Bitcoin maximalists has actively sabotaged the very ecosystem that it will need in order to thrive long term. If you need a specific and practical proof of that, I am specifically referring to how the Orange team played the statist games and shamelessly lobbied Congress to leave every other coin outside Bitcoin to be deemed a security. If you wanted to short-sightedly sell the branch on which you're sitting to secure easier short-term gains and obliterate long-term adoption, you wouldn't have done it otherwise. So, as the so-called victories derived from lobbying Congress are now starting to pile up, Bitcoin is now collecting the poisonous gift that comes with collaborating with the enemy. And its most naive supporters are chest-beating themselves into believing that those ETFs were somehow the checkmate Trojan horse move that will eventually capsize the fiat system and replace it with sound money. That is laughable. It will not. The seemingly victorious ETF approvals were not the 4D chess move on the powers that be that it is advertised to be. At best, it will enhance fiat gains for a little longer, but in reality, ETF approvals were the first clue that government understands now very well that the only way to beat a technological watershed that they know they can't stop is to absorb, co-opt, and ultimately corrupt it from within by leveraging investors' greed against themselves, essentially clearing the path for an easier deployment of CBDCs. As I painstakingly tried to explain it to my subscribers in this video, there will be no freedom attainable from crypto alone. Deeply understanding true morality and natural law as a whole is the only way and the ultimate prerequisite to freedom. Crypto is and will remain a mere tool used for nothing more significant than greed and selfish gains until humanity understands and applies first moral principles on the daily. The powers that be understand this very well and are working diligently against true freedom as the herd is focused on the ETF hype and whatever number is going up on TradingView. Incidentally, a funny yet very revealing event happened merely 1 month after the Bitcoin ETF approvals, one that confirms the message of this video. Through the listing, Monero was forced out of Binance, the largest centralized crypto exchange in the world. This sent Monero tumbling by as much as 35% the following day. Way beyond the dire financial consequences that this regulatory push inflicted on the people, that event alone, if there ever was a significant one during this relief crypto rally, is the one that everyone should have focused on with both extreme worry and interest, as it pointed directly at what crypto investors should seek if they are honest with themselves and their mantra of freedom. That one narrative is what the system truly fears. I'm not talking about crypto. I'm talking about privacy. You see, there cannot be any freedom without privacy. There cannot be any alternative crypto financial system without it either. And as they are blindsided by the prospect of so-called institutional crypto adoption, crypto enthusiasts in general and influencers in particular are completely missing the point. So much so that the privacy ecosystem that started in 20th spot in terms of market cap at the beginning of the relief rally has now fallen down as low as 30th. It got so bad, in fact, that people are now valuing dark-themed coins, GameFi, and metaverse narratives in magnitudes of their own freedom, for crying out loud. So if that doesn't tell you anything about the average public dumbed-down state of consciousness, I don't know what will. If anything, Bitcoin ETFs are the precursors of a budding trend where crypto is being co-opted by Wall Street and ultimately governments. Beyond the obvious appeal of capital flowing into this sector, there are three ominous ways that I can think of where Bitcoin would find itself disfigured from the sovereign store of wealth that it was designed to be. First, there is a scenario whereby, since the Bitcoin blockchain is transparent, only KYC'd and third-party custodied Bitcoin would be deemed compliant with AML rules and redeemable in kind. That would leave all other Bitcoin outside of those held by ETF providers and accredited custodians to become legally tainted, and all peer-to-peer transactions taking place outside of those compliant channels to become criminalized. The second scenario would be that some of those ETF providers would start funding Bitcoin R&D and ultimately influence its developers to such an extent that they would push for a more compliant fork relying on proof of stake and yet again restricting the on and off ramp of proof of work Bitcoin or even its convertibility. The third and last scenario would be that the market capitalization of Bitcoin could run up to such a level that its volatility would become acceptable to become part of central bank balance sheets. Shortly after, it would become a so-called strategic reserve asset, which would inevitably be deemed a potential catalyst for systemic risk, warranting state control of miners and the implementation of its confiscation from the public, similarly to what Nixon did to gold owners back in August 1971. From this vantage point, you can see how hard it is to get excited about those ETFs, and especially why privacy chains make such a compelling argument both as an investment case and a long-term solution to financial freedom. But this seems to completely fly over the head of most crypto investors at the moment, who just care to flock from one hot narrative to the next to soothe their cringy dreams of 10x or 100x plays that most will never find anyway. However, what is for sure is that most chains are fully transparent and therefore subject to tracking and KYC scrutiny once digital IDs come into force, which they necessarily will with the advent of CBDCs. As such, since end-to-end privacy is not protected for most of crypto cannot be considered currency, let alone money. Money requires fungibility, which most chains do not offer. Only privacy coins offer censorship resistance and true freedom to transact. One privacy coin will always equal one privacy coin. Once again, that feature is not true for most of crypto. That is its Achilles heel actually. Only the public will once again find out and get interested in the truth once their backs are against the wall and everyone suddenly scrambles only to find out that the convenient liquidity avenues to buy into privacy protocols have been carefully eviscerated while they were asleep at the wheel. I will only leave to your imagination what will happen to the price of the privacy sector once all the offers available can only be found peer-to-peer to essentially be taken away from the very people who are diligent enough to self-custody, accumulate, and will certainly not want to sell much of their bags when their family's financial survival squarely depends on it. In researching the best privacy protocols, I wanted to bring to your attention 3 gems that you can still buy somewhat easily today, not only as an insurance to financial tyranny, but also as a very compelling investment case in my opinion. What I call gems are mostly finished and or time-tested protocols with 100% working functionalities and apps. I am not talking about projects and promises here. Even as Bitcoin is racing back towards its previous highs as of February 2024, these coins remain very reasonably valued for the reasons that I just detailed. While the public simply does not think forward and cannot comprehend the big picture, these coins are still flying low under the radar, and this is your opportunity to take advantage of this information asymmetry. The first coin is obviously Monero. After dropping from $165 to as low as $100 on the day of the Binance delisting, and currently at around $120, this is in my assessment one of the very last moments to take advantage of a monumental bargain for what is arguably the king of privacy coins. The delisting alone should tell you that what Monero was made for is working exactly as designed, and the establishment hates it. We're not gonna get an ETF on this one, that's for sure. Just know that Monero is a currency, not a smart contract chain, so all you will be able to do with it is transact. Think of it as pure digital cash, untraceable, near free to transact, and fully anonymous by default. Although theoretically not capped like Bitcoin, its coin issuance is currently sitting at 18.4 million versus 19.6 million for Bitcoin, and its rate of inflation has become a measly 0.85% since mid-2022, and will remain as such forever in order to incentivize miners, which is a situation that Bitcoin has not provisioned for past its 21 million coin hard cap. Lastly, the random X mining algorithm that supports Monero is ASIC resistant, making mining farms much harder to become profitable, which in turn promotes decentralization and drastically diminishes the risk of the attack vector that governments have on Bitcoin mining farms, for example. Agree with me or not, Monero is what Bitcoin should have been from the start. It is, in my opinion, the true peer-to-peer cash that Satoshi was talking about in his white paper. Wallets can be downloaded for desktop as a GUI and for mobile using the Cake Wallet app. The second coin on my list is Railgun. As you know, Ethereum is the OG of smart contract chains, but it is fully transparent and more easily censorable at the validator level. Now it has become a proof-of-stake chain. Railgun fixes this. Railgun is the governance token of this protocol that essentially enables you to cloak your Ethereum transactions and renders them totally anonymous, including when it comes to interacting with DeFi apps, not just for sending and receiving ETH or ERC20 tokens. Think of it as a bridgeless, feature-complete privacy plugin that shields your privacy for both simple transactions and your DeFi trades. So, as you can imagine, liquidity is not a problem here since Railgun merely bootstraps on the immense liquidity of Ethereum and its layer 2s, such as Polygon, Arbitrum, and Binance Chain. Further, Railgun does not rely on mixing transactions like Tornado Cash used to do. Rather, it leverages the ZK Snarks technology, which is a variation of a zero-knowledge proof protocol, to totally shield your assets and your transactions by the use of a private anonymous sub-wallet that works just like a regular wallet. The only difference is that your shielded address will start with 0ZK, as opposed to the regular 0x prefix for standard public addresses that you're used to. On top of it all, there is a possibility to stake your tokens on the protocol's DAO, which allows you to not only participate in governance votes, but also to collect fees in those tokens being shielded by users of Railgun. The protocol has a current supply of 57.5 million coins with a finite supply of 100 million. That is a current market cap of just $20.7 million, and a ratio of 1.28 versus TVL, which is very reasonable compared to 1.11 for Uniswap, 2.72 for Trader Joe, and 5.17 for Osmosis, for example. The Railway wallet is available for both desktop and mobile. The third and last protocol that I wanted to share with you is Shade Protocol. Shade runs on the Secret Network, which itself is a privacy as an option chain that is part of the Cosmos network. Shade Protocol provides a full suite of privacy-shielded DeFi services ranging from bridging, staking, lending and borrowing, bonds, swaps, liquidity pools, derivatives, and especially a privacy-enabled stablecoin called Silk. Like I said at the beginning of this list, this protocol actually works. I mean, sure, the team has promised even further upgrades down the line, such as liquid staking and whatnot, but all of those functionalities that I just mentioned are fully functional as of today, like right now. And if you're not convinced about this one yet, maybe the insanely cheap tokenomics will. With a little over 2 million tokens out and a cap of just 10 million, this gem of a privacy protocol has a market cap of just $12 million and a rock bottom ratio to TVL of just 0.48. Talk about dirt cheap for a fully functional project. And as an interesting fact, for those of you who still believe that privacy is overrated and cannot be valued, I'm inviting you to check out the price of Silk, their private stablecoin. It is consistently valued at 8 to 10% over USDC or USDT. As you can see, the market is already speaking to support the privacy thesis. So I'm going to stop right here with this video. If anything, I hope that it will have been enough to steer you away from the hype and to adopt a longer and broader view of the crypto dynamic at play, especially with regards to how the powers that be are trying to co-opt it. Privacy is not a gadget or a tool for criminals. It is a requirement for honest people to secure their freedom, one that will become glaringly mandatory in the very near future, not only for your prosperity, but for your very survival. The system that crypto seeks to replace will not go without a fight, and you can bet your bottom dollar that once it becomes obvious to the masses, the stampede into these privacy chains will be like a crowd rushing out for canoes out of a sinking boat. The coins and protocols that I presented in this video are just a start for you to explore this sector. And in case you can think of another candidate that you have done your due diligence on, please feel free to drop it in the comment section below for everyone to take notice. Whatever the case may be, right now is your chance to position yourself when nobody's looking yet, not later. So think straight and take action. I'll see you on the other side.